Hello and good evening, everybody. And welcome to tonight's stock market Kopitime. We try to get it on every Wednesday at 8 p.m. So, first of all, thank you very much for joining us tonight. And I hope that tonight's sharing will be somehow beneficial for everyone. Hi, Seng Hock. If you can hear me, can you just type yes on the comment? All right, if you can hear me. Okay, thank you, Ailey. Thank you, Lawrence. Hi, good to see you all here. Well, please do share tonight's live stream in your social media if you can, so that we'll be able to get more people to join in. I know it's still quite early right now, 8:05. I hope that more people will be joining in soon. But yeah, once again, thank you so much for joining us tonight. What I'll be sharing with you today is, some data or some facts about where our market is heading, where the economy is heading, especially right when Bank Negara came out and said that our GDP or gross domestic product for 2022 grows at about 8%, which looks quite good. But question is, what about this year, right? And of course, this year we were all out of pandemic of the COVID-19 lockdown since last year, or going back, basically finding back the norm. Um, but when you look at business activity wise and economic wise, are we going to look at a good recovery, right? Now, before I start, whatever that is being mentioned here today is for educational purposes only. It's not intended as any investment advice. All right. So basically, what I'm sharing you is my own opinion and our opinion here, based on where we look at the facts and figures that we see, and we just basically want to share with you guys. All right. Now, we are in a economic cycle. The question is, which part of the economic cycle are we at, right? Of course, the expansion phase that we see um, before the MCO and even during the MCO is probably over. We are seeing a slowdown in most activities, especially not just Malaysian market but also globally, right? But the question now is, are we at a slowdown or in a contraction, or are we at a recovery? Is it too soon enough to call our market recovering, right? So I just show you a few set of data so that you can make your own decisions, all right, or your own due diligence. Now, if we look at the market cycles, okay, hold on. Sorry, I think I got a wrong slide. That was last week's one. Okay. Okay, let me show you now the current one. Yeah. Okay, sorry for that. All right. So question, where are we at the cycle now? You look at the key events in 2022. We have, of course, the COVID pandemic, which we are all out. We have the Russian and Ukraine war, which is still going on right now. There's an energy crisis in EU, in the European Union, basically in the fact of the Russian and Ukraine war. Right? And we also see a series of a very aggressive interest rate hike in 2022. And of course, the reason why rates are being increased, including Malaysia, is because of inflation, right? And last year, we also saw a general election where we now have a unity government. So basically, these are the key events that happened last year. So I've really shown you the chart right now. Question is, yes, the Bank Negara did show some figures that our GDP is growing, but the question is, are we really recovering? All right. So I'm just going to show you, first of all, this particular chart. This is the KLCI. If you look at the top part here, um, and the bottom part are the interest rates. All right. So if you look at the orange or red colored line, that's the US interest rate. Okay, of course, the Federal Reserve is the one who controls the interest rates. And the reason why we see a strong hike in 2022 is because for them wanting to fight inflation, right? But if you look at this blue line here, that's our Malaysian OPR, or overnight policy rate or interest rate. And you can see that in 2022 or late 2021, it was the first time in 15 years, all right, in 15 years, that our interest rate is lower than the US interest rates. All right. The last time that we see this was sometime in 2005. Okay. So we are seeing quite a aggressive rate hike in the US markets. And if you look at in 2005 or prior to 2005, all right, when the US interest rates gets higher and higher and higher, um, of course, when economy grows at a very fast pace, interest rates also rise. And you can see markets from 2004 up to 2007 had this strong bullish rally, and that includes the Malaysian market, all right? The chart that you see here is the KLCI. So we already see very a strong one here. But in 2008, if you still remember, there was a subprime mortgage crisis in the US. Um, and that caused a financial crisis in the US, and that affects globally as well. Okay, and that includes Malaysia. So we see our KLCI fell quite substantially as well. And after 2008, 2009, the US starts to lower interest rates again to a level near zero or even zero. And we can see that zero level sustained for quite a number of years, right, from 2009 until 2016. But because of that quantitative easing, right, where money is easily available, and of course they created more money to be printed out and go to the economy so that people can sustain after the crisis. This is also to actually bail out quite a number of big companies, especially financial institutions in the US, right? So market rallied strongly, right, from 2009 globally, and also the Malaysian market. So of course, when money is cheap outside, where our interest rate, you can see here, is still higher than the US interest rates. That time we are around 2.5 to 3%, right? We see hot inflows of money from the US and from Europe, and of course, Japan is also zero. And we can see markets started to rally, right, from 2009 all the way up to 2015. So this was one of the strongest bullish trend that we can see, right? After the financial crisis in the US, our market actually went up. And then our market started to move sideways a little bit. You can see because interest rate is starting to increase from 2016 all the way up to 2019, right? And therefore, our market did not see any more inflow of money. It just moved sideways. Okay, and then COVID-19 hit, right? The time US is already increasing their interest rates, but before they can increase further because economy was growing quite well, we have that pandemic, right? And because of the pandemic, again, markets fell. The US market fell as well. And therefore, they start to lower the interest rates and go back to almost zero again. Okay. Now, from 2019 onwards, we see the US markets continue to climb to historical highs, but not the Malaysian market, right? And then if you look at that point of time in 2019, 2020 to 2021, we have this so-called political instability, right? We see change in government hands. We see that the market is quite mixed when it comes to choosing government. We don't see really an inflow of money coming in. And therefore, despite markets going up higher in 2020, 2021, 2022, our Malaysian market just moves sideways. All right. So today, you see the US interest rate starts to increase quite aggressively. And of course, the reason why US increase their interest rates is to fight inflation, right? The question is, can the economy start growing? Okay. Once the inflation is being tackled, can the economy continue to grow? So US inflation, you can see, has been coming down. The peak was about 9.1% in April, somewhere in June 2022, right? And then it started to taper down, and now it's at about 6.5%. in December, and it's probably going to go lower as well, because inflation is calculated year on year, right? So if you already have a high base last year, even though it increased a little bit, it's also increasing, but it's probably going to be lower lah. So for the inflation, US inflation target of being around 2 to 3%, I think that will be achievable in the next few months, right? Because we are comparing the inflation rate, which is the growth rate, on a year-on-year basis. All right, and of course, the next important question that inflation definitely can be tackled, right, by increasing interest rates. But the question is, can it spur economic growth? Okay, so if you look at the interest rate projection from the Federal Reserve in US, okay, we are seeing a very strong interest rate decline. Okay, in 2023, we're probably going to see it, you know, a very strong increase in 2022, 2023. They're still, probably this year, they're still going to increase a little bit more, but maybe not as aggressive as 2022, lah, right? But we're probably going to see it slowing the interest rate to be lower, okay? That's to support the economy once inflation has come down. But then again, this is just the projection from the Federal Reserve. Okay, for this year, 2023, right? Most of the analysts, including the IMF chief and including World Bank, say that most of the global economy will still go into a recession in 2023. All right, that's what they say lah. Okay, but what about Malaysia, right? So if you look at Malaysia, our GDP growth rate has been quite good in 2022. Okay, after the COVID, you can see that during the time of COVID in 2020, the lowest quarter it went was 17.1% decline in its GDP, or quarterly GDP, right? And you can see that GDP has been increasing in end of 2021 to 2022, quite a good growth. Then again, remember that this is also calculated on a year-to-year basis, right? Quarter to quarter. And of course, if you look at, for example, you look at the third quarter 2022, the rise is 14.2%, right? Is at 383.8 billion. If you look at quarter 3 2021, it's 336. So that 14% increase is comparing the 2021 third quarter, right? And therefore you see that increase. So if the base is low, definitely the increase is better, right? But if you look at the value of the GDP, you can see that it hasn't really increased that much, right? But although it's still the highest in the past few years, which is a sign of quite a good sign actually, all right? And of course, recently the central bank, or Bank Negara, says that there'll probably be no recession in 2023 due to the strong economic progress or growth that we have seen earlier, right, on the chart. So full growth came in at 8.7%, which is quite impressive. But of course, you are comparing this to 2021, right? But it's almost triple in the previous year, and the quickest pace since the 8.9 expansion in year 2000, and that's like 23 years ago, right? But if you look at if you read the news carefully, you said that the bank governor, right, No Samsiah Muhammad Yunus, said that recession was not expected in 2023 as the global economy has continued to grow, right? But this line is more important, right? The governor said the growth momentum is expected to moderate this year. So we see a strong growth in 2022, but what about 2023, right? Because you already see the value of GDP has increased in 2022, and in order for it to have stronger growth in 2023, you need to have more business activities lah. You need to have higher GDP, much higher GDP to show a growth. So we're probably going to see an increase in its GDP or economic growth, but at the moderate pace, all right? Because of slower external demand, and also, but you should remain positive in territory. So this year we may see whether we're going to go into recession or not, we do not know yet, all right? But if you look at businesses today, if you look at the economy today, I mean, everything is still going well. This jobless rate is also quite low, right? So all these factors may help this year, okay, especially if the central bank do not increase the interest rates further, or maybe just increase slightly, to continue to help economic growth. All right. So if you look at the forecast for GDP for 2023, Bank Negara is looking at between 4 to 5%. The International Monetary Fund, or IMF, look at about 4.4%, and World Bank look at Malaysian GDP to grow at about 4%. So we are basically looking to about 4 to 5% this year, which is quite moderate, still quite okay. But are we out of the woods yet? Well, hopefully if this year we have a soft landing, a buffer, then we may see businesses start to pick up more activities. All right. Now, I just also want to share with you the data, right, for the KLCI. The chart that you see here are the bull and bear performances, right, over the years. Right. So you look at this, there are times in the green one here shows how long. The D is the duration. It takes about 14 months, for example, at this level here, okay, where the market or the index grows 160%, and then it went to a bear market where the index fell down 45%, and it takes 4 months. So there are different time frames. Sometimes it can be 14 months, sometimes it can be 100 months, 80 months, 112 months, and so on and so forth. Okay, but what you can see on this trend is that bullish duration, all right, a bullish market duration is normally much longer than a bearish market duration, right? So there's always a short-term pain for longer-term gain. And whenever there is a bear market, when the market when the market starts to go higher, it moves into a historical high, right? If you look at our market itself, the last time it was at a historical high was somewhere in 2014, right? In 2018, it tried to break that high, but it can't. Okay, we do not see enough funds flow into our market despite low interest rates, right, that we see from the US, from out of Malaysia, very low interest rates. But it's just that the money is not coming in here. Okay. In fact, the market moves into a correction and did not move into a historical highs, whereas other markets, including our neighbors, Singapore, Thailand, Jakarta, and all that, have moved onto historical highs in 2018 to 2019, but not the Malaysian market, right? So here, it's like investors are being very cautious in the Malaysian market. I think partly due to the political scene in Malaysia, right? Because there was lots of uncertainty, especially during the COVID-19 period, or even before the COVID-19 period, right? So our market has been moving sideways over the past 1 year. Okay, so the question right now is, are we going to see a bear market or a bull market, right? I'm going to show you more data here. If you look at averagely over the years, right, between the bull market and the bear markets, if you look at the ratio between a bull market and a bear market, averagely, okay, since 1986, 1984, you can see that bull markets lasted averagely about 5.6 years, whereas a bear market lasts about 1.3 years. Okay, so generally bear markets are shorter, right? There's short-term pain, but markets continue to gain in the long term, right? Especially in emerging and growing markets like Malaysia. I think what we need to do right is basically getting our government get more support and is able to implement its economic policies rather than fighting for their political survival, right? Hopefully with this new government we are able to really look into the economic side of Malaysia in a more serious manner so that we are all able to grow, especially when the bull market is back. All right. So KLCI has gone down for about 18.5% in 2 years, nearly 2 years, in 23 months. So it has declined, right, from the high in 2020. Okay, so during the pandemic, of course, markets has rallied, and the rally was mostly because of glove counters, healthcare, and glove counters also in the KLCI index, right? So, but after that strong rally, we see markets start to pull back again, and has gone down 18.5% in 23 months, right? Now, what is important here is that if we look at cycles, right, stock market basically is faster, right? It leads the economic data. Okay, stock market is more current lah, right? Because everybody makes decision almost every day in the markets whether they want to buy and sell shares, whereas economic indicators are lagging in nature, right? So this is a chart from Seeking Alpha. Um, you know, one of the quite famous research companies in the US and in the world. But basically, you can see all this, and you ask most of the analysts, they will give you the same view, lah, right? That the stock market normally leads. Okay, so if you look at the bear market, if you look at the stock market being at a bear market, right? Um, where let's say a market is bear, right? The stock market is bear. The economy is just probably going down. All right. But when the stock market is at stop, okay, the economy is just at a recovery. All right. So it's always slower. Okay, which means that markets will form bottoms first, then only the economy data will go at the bottom. So right now we are seeing economy data probably I'm not sure whether it's really bottomed out yet, but in Malaysian market sense, we can see has bottomed out a little bit, right? And you can see stock market starting to increase a little bit. Okay. The question is, are you going to wait for the economy to show you strong, robust growth, then only we invest, or should we really look for opportunities now in investing, right? Because by the time we see full recovery in the economy, markets are probably already at the peak, right? And this happens again and again and again. So that's why for us, this will be the best opportunity time, probably in a decade, right? In 10 years, because you look at markets, bull market lasts about, I showed you earlier, bull market starts about 5.6 years, but you at the bear market is about 7 to 8 years, lah, right? So if we miss this opportunity, we may have to wait for another decade, right, or another 10 years to really get into the opportunities where we might be able to buy companies that are selling on the cheap, right? It doesn't mean that the value may go down, right? It's just the prices will go down because market sentiment is just bearish, right? So if you are able to find really good companies to invest and hold it when the market goes into a bullish trend, then really we are able to capture the best time lah, right? Now, last chart I want to show you here is basically the KLCR from 1985 until today. Now, the lines that you see here on the chart, right, this is a linear regression line. A linear regression is basically a straight line method, a linear method of finding average prices. All right. So if you look at the line between the blue and the red one, the middle one, that's the average, okay, of the stock market of the KLCI performance since 1985. Okay. So which means that if the KLCI is between the red and blue line in the middle line, that means it is trading at its average. Okay, from the growth that we see from 1985 to today, lah. The bottom line here shows you the bottom extreme. Okay, and normally the KLCI will go to that level when there is a crisis. Okay, and the top line here at the top, the blue one at the top here shows you the extreme and the bullish market. And normally when it reaches the extreme, we're probably going to see market is already overbought or overheated. We're going to see a correction, right? So we have seen, right, in 2014, the KLCI went up to this extreme high, and therefore we see a pullback in the markets, right? And it went down all the way down to near this bottom or the extreme bottom. And for the past 5 years, it has been trading near this bottom. So it has been finding some support over here. Okay, so if the KLCI were to continue its long-term trend, right, then of course we may see a rebound and the KLCI will be trading inside this range. Because if it falls below that range, below the bottom extreme, currently about 1,400 points, right, 1,400 points, that means the growth that we see here over the past 40 years, right? Over the past 40 years has been distorted lah. All right. So in order for it to grow steadily, okay, following this trend, it has to stay above 1450, 1,450 and continue to increase. All right. So during prices, we see the index moves at the bottom level, and today you see that the index is also near the bottom level. So we are looking, right, from 2014 peak here, okay, when the KLCI reaches nearly 2,000 points, it started to come down here, right, at about 1,500 points currently. So question is, like I said earlier, right, we are looking at a market at very low levels right now, okay, compared to the growth that we see for the past 40 years. Economy-wise, we are, I mean, it's still slowing. It's still slow, but last year was a good year. Hopefully, this year you'll be able to sustain as well. All right. But remember, by the time that we see strong economic growth, our market is probably gone up already, right? So probably right now it would be a good time to look for opportunities. And the other thing you have to remember is the KLCI is only made up of 30 stocks. All right. There are quite a number of counters that has already gone up quite substantially over the past few months. Okay, because the KLCI is only 30 counters. So look for opportunities right now, right? If you can, what can you do as an investor, right? So for stock investors, it's really a good time to rebalance your stock investment portfolio. Not really rebalance, but to readjust, meaning that you may want to look at your investment portfolio for investors, right? And look in your portfolio and look at the company's fundamentals and also its performance. You may want to take out those who are not doing well in a sector that is not doing well, and replace them, right, with companies that may be developing, right, that may benefit, okay, when the market starts to recover. Because if you don't remove stocks that are not performing, and especially stocks that are not doing well and also not in the right sector, even if the market rebounds, these stocks will not be able to recover. All right. And therefore, we may want to look at, again, relook into your portfolio and adjust them accordingly or rebalance them accordingly. Okay. Make sure there are only good stocks in your portfolio. Okay. For new stock investors, you have not invested at all, this is, again, like I said, probably one of the best times to start building your investment portfolio, right? Not when the market was really at a strong bullish trend in 2020, right? Where, in 2020, just that a lot of people were investing in glove counters and investing in um, healthcare products and so on and so forth. Those days are over, right? Because that's only because of that particular event that helps these particular sectors. So moving forward, okay, of course, these share prices have come down. Imagine if you have built that portfolio in 2020, right now your portfolio will not look so good, right? But if you build a portfolio now where prices are low, that will be the best time, because if the market do recover, that's where your portfolio performance is going to grow even stronger. All right, because you are buying probably near the bottom. If the market goes lower, some more also, then it's not so bad, right? It's better than buying when the market is peak, because you'll probably be better off than most other investors. All right. So really, for stock investors, if you do not know how to rebalance your portfolio, of course, you can always look for us, right? Especially our members. If you are still new, we do have a program, a stock investing program, right? And we actually just had one event last Saturday, but we're going to have another event, same event on the 11th of March, which is for free. All right, my colleague will put the link there so that you can register. It's only half a day from 10 to 12:30 p.m. It's basically a seminar that shows you the stock investment GPS. You know what's the GPS direction, right? To basically share with you how can we help you, to build your investment portfolio, or even to readjust your investment portfolio so that you are ready to invest and profit from this market if the market starts to rebound and moves into a bullish trend. Okay, because remember, bullish trend are always longer than the bearish trend. So you can just take your phone and scan the QR code over here to register, or just go to this website. Our colleague will basically put the link on the chat, on the comment section, so that you can click the link and also register. And please do share with your friends who are investing in the stock market as well, because if they want to hear us out, right, how we should not miss this once in a decade opportunity, please do join us next month on 11th of March 2023. So please do register your seat because um, right now it's still free. So please do register. All right. If you want to fast track, right, yourself, we are having a value investing program. It's a 3 days master class where you can attend the full 3 days. We are actually having one in 2 weeks' time. All right. The next Saturday, actually, okay, the next Saturday on the Friday to Sunday, the 24th, 25th to 26th of February. Okay, 3 days of workshop. Okay, so you can register for this event as well. If you are interested, you can just type PM, you can just type VIP on the comment section. Our guys will get in touch with you so that you are able to register this program. Okay, it will get also in touch with you on what this program is all about. Okay, so just type in VIP on the comment so that we can get in touch with you, how we can help you to go through our value investing program. We teaches you how to look at data, financial statements and company trends so that you're able to build your investment portfolio. All right. So now the cost fee is 4,990, but we're actually still having our Chinese New Year promo. Okay, if you are interested, right? Like I said, just type in VIP. Okay, our colleague will get in touch with you. All right. So it's going to be we're going to have a 50% discount for those who are interested, right? So we're not. So all you need to do is to pay a 2,495 for a 3 days workshop. Okay. All right. So now, if you have any questions at all relating to today's presentation or relating to investment, you can just type down those questions. All right. I see that uh, Ding, you have a question, right? There is a news mentioned Malaysia economic growth 8.3%, which is higher than Singapore. Any take on this? Yeah, I also just presented earlier, right, that we are looking at a very strong GDP growth for 2022. Okay. But remember, GDP is always calculated on a year-to-year basis. So 2021 was at a very low economic activity, right? So of course, when there is a rise in economic activity, the following year, the next year, we're probably going to see a very high increase in terms of percentage. Because imagine you're at a very low base, right? And if there's an increase in 2022, it looks very good lah, year on year. Okay. So now that we have higher base this year, the question is in 2023, are we able to grow even more than 2022? All right. So that's why you look at the Bank Negara statement. If you look at the news, it says that yes, they said that we may not go into a recession next year, but don't expect high growth that we see in 2022. They're going to expect a moderate growth, right? They won't give you the full answer, lah, but moderate growth is the answer. And if you look at some of the forecasts being made, whether by Bank Negara or the World Bank or the International Monetary Fund or IMF, they are looking at between 4.4 to 5%. All right, still okay. But then again, if interest rate is still high and inflation is still high, but the growth is only about 4 or 5%, I don't think so. The growth will be strong enough, lah, right? Because if interest rates increase, generally, the performance of markets, okay, including stock market and also including the economic growth, should be very strong. All right, so very strong means we should see double-digit growth, lah. Right? We're almost there, like 8.3%, 8.7%. But then again, we are comparing 2022 with 2021, where 2021 is a low base. So next year, we do not know yet, but Bank Negara already give us a heads up that we're going to expect just a moderate growth for 2023. Okay, hope that answers your question, Ding. Okay, any more questions? All right, so it's an opportunity for you to ask me questions. If not, we'll also see you next week. Probably on another topic. I'll try to get another person to come together with me, right? To also share with you some information that we may think would be of benefit to you. All right. Are there any more questions? I'll give you about another 5 seconds before. If not, we're going to end this particular session. Okay, no questions? Well, I do hope to see you guys on the 11th of March, right, next month on a Saturday morning. So please do join us, and please don't forget to click on the link that is provided on the comment section. Ailey has provided the link. Then we'll see you on the 11th of March. All right. Please do also share with your friends if they are interested in building a investment portfolio to grow their wealth moving forward, especially when the market starts to go into bullish trend. Please share this information to them. All right. Or please share today's session to those friends of yours in social media. All right. Thank you very much. Thank you, Ding. Okay. Yeah, so we are seeing quite a number of retrenchments and so on and so forth, right? So really, whether we're going to see the effect of the COVID-19 pandemic and the rise of interest rates this year will be the test, okay? But again, that's economic growth, right? But stock market has already come down quite substantially, especially Malaysian stock market, which has actually seen it not moving anywhere from 2014, right? Okay. Whether this is going to be widespread or not, depending on the US, whether they're going to um, increase the interest rates even more, right? But looking at the way inflation is being managed right now, right? It has been quite manageable. It has been brought down from 9% to 6.5% at the end of 2022. We may see it going down some more, again, because it's on a year-to-year basis, right? So we may see increase in interest rates, but we will not probably see a very aggressive ones. And this increase in interest rates, because it happens very sharply last year, right? We're probably going to see some effect this year. All right, definitely we'll see some effect this year in terms of economic growth. So that's why I think, like what Ben Negara said, we're probably going to see moderate growth. Recession or not, right? Well, it really depends. But looking at what we are doing right now, where Malaysian market is a little bit more domestically driven, it's not, it's not so prone to our international markets because our investments are mostly from within the country itself, right? We do not see very strong inflow of money from globally at the moment. But hopefully after this, with the new government, new unity government, we're able to attract more investments here, right? Because our market can be attractive, okay, if the really the institutions globally or foreign institutions starts to look at our market aggressively again. Okay, so just cross our fingers. And hopefully that the market has bottomed out, and when the economy start to grow, the stock market will start to really move, right? But again, hopefully it does not recover very fast, because this will be the best time to actually start to build your investment portfolio. Okay. All right, with that, if there's no more questions, thank you so much for your question, Ding. I think there's only one person, the others all, I'm not sure what you're looking at, but whatever it is, please, I do hope to see you on the 11th of March 2023. This is where we will discuss even further face to face, right? So that you can get a better idea why we think investment is still the best opportunity in a decade right now. All right. So thank you very much, everyone. We wish you all the best. And DT, okay. Yeah, now you put your full name there. Okay, so thank you very much, and we'll see you again. Have a good evening, everybody. Good night.